Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of correlation and regression, we will be considering the price developments in the aftermath of non-farm payroll release for the United States, in which we saw that the job growth has softened. But if we look at the actual numbers, the number of job created in non-farm sector, the job numbers are higher, but it is not enough to keep the dollar stronger. So after the release, we have seen dollar softening across the board, and most of the other major currencies have gained. So now we have to consider which currency in particular is the strongest and which one is the weakest as we head into the North American trading session so that we can exploit the situation to our advantage. If we look at the Euro USD chart, here it has risen almost half a percentage point from the lowest point to the current levels, and it has been one of the gainers of the non-farm payroll release. Now, if we compare it with the USD JPY in particular, let's see how much USD JPY has declined. You will get a clear idea. So the USD JPY has declined substantially around 150 points from the highest point just prior to the release to the current levels, and JPY is seemingly trading quite strong. Let's see if we can get the comparison done right. So the JPY is apparently on a stronger footing even in comparison to the euro, simply looking at the magnitude and also its immediate swing low. So for euro USD, the swing low came in after the release, but for the USD JPY, the highest point of the day was quite earlier. So looking at that, we have to give weightage to this timeline of the events, and that puts the JPY in the stronger zone compared to the euro. Let's compare it with the AUD. AUD has gained substantially more than 1 percentage point from the low point to the high, and it is also on the stronger footing compared to the euro, but not in comparison to the JPY. So far, we have seen three currency crosses of the USD, and JPY seems to be trading in a strongest manner against the dollar, and AUD is also following suit with these gains of around 1 percentage point. Euro has also gained, but Euro's gains have been limited in comparison to the gains which we are seeing for the AUD and the JPY. So if we have to go with the trend, then I think JPY is offering the best chance as of now in terms of the volatility as well as the relative strength in comparison to the other currencies. Let's see what's the development for GBP. GBP has also gained, but not enough in terms of the magnitude. So its gains are limited in comparison to the gains of JPY and the AUD against the dollar. So we will have to place it in between. It is apparently little more strong compared to the euro, but not strong enough, as is the case with other two major currencies of AUD and JPY. So we have to put it in the middle of the whole spectrum of these major currencies. Let's see NZD USD. NZD, if we compare the low to the high, the gains are substantial for the NZD as well, with gains of more than 1 percentage point. So that is putting it just equivalent to its Asia Pacific peer, the AUD, and it is on the stronger footing in comparison to the GBP and the Euro, but little less so compared to the JPY. So even after we have seen these five major currency crosses, the JPY seems to be the strongest, the most bullish one after the non-farm payroll release in trading against the dollar. Let's see CAD. The CAD has also gained around 1 percentage point, and for it, the high had come in earlier prior to the release, so that factor puts it on the stronger footing compared to the euro. So the CAD is also quite strong, but not as strong as AUD and the NZD and JPY. So the Asian currencies, Asia Pacific region currencies, seems to be on the lot stronger wicket here in comparison to the European currencies. And CAD is also strong. It is relatively on the stronger terms in comparison to the euro and the GBP. USD CHF, it is trading almost in a similar fashion to the euro, so we don't really have much of a difference, and its gains are limited in comparison to the other currency. So I think if you have to go with the flow and keep betting on the strength of the dollar, then the weakness of the dollar, then we have the USD JPY, which can be kept in mind for short sell trades. But if you expect after consolidation the trend to turn, then in the first line of reference will be for the euro, or even CHF can be considered. So let's compare its larger term chart to see how things are shaping up on larger time frame. So for USB CHF, we had this formation of higher highs and higher lows. Now this prior swing low seems to be broken, and we will have to allow it more time for consolidation before we can be sure about a possible reversal. But here the dollar is quite strong in comparison to the CHF for the last couple of days, so that trend is likely to keep its shadow even after the apparent weakness which we have seen after the release of non-farm payroll data. So we will have to trade cautiously here, and it is not advisable to go with the flow. Rather than that, this can be the instrument of choice whenever you see the signs of reversal emerging in the market. So far, the dollar is on the weaker footing, so we will have to go with that. But if you want to play with that, then the JPY or even the AUD is a better bet for the relative weakness of the dollar. Let's see the story for AUD on the larger time frame. So AUD in today's session was trading with this bearish undertone, but this release had he has given it a new lease of life where it has broken past this immediate swing high. So that helps us it make a formation of higher high, though we don't really have a higher low in place, but still maybe after due consolidation we can even go for the fresh trade with the expectation of further rise to come in maybe tomorrow's session or there onwards. Right now, it is a bit risky to go for a new trade right now at the current levels. Maybe after due consolidation, we can indeed think about that as well. So here we have seen these developments in relative terms where we have got this whole spectrum of currencies with the AUD and also the JPY being the most bullish, trading in a most bullish manner against the dollar. Whereas if we look at the chart of Euro and the CHF, it is not strong enough in comparison to other major currencies while trading against the dollar. So we will have to keep these relative strengths and weaknesses in mind while looking for the trades to be initiated in respective instruments. Now for equity segment, The gains are quite phenomenal for the Dow Jones Industrial Average. And if we look at its chart on the hourly time frame, it has even been able to successfully climb above this immediate swing high. So that gives us a reason to believe in the possibility of Dow Jones climbing toward these 33,500 levels, but it has not really broken this range as of now. So it is a bit risky if you want to initiate the trade now. The range on the higher side is not that wide. We will have to keep our targets in vicinity of these prior swing highs. So whatever gains have been there are, I think, likely to increase our risk for initiation of the new trades. If you are already in trade, if you already have a long position, then that can be kept open, and we do have the possibility of getting it closer to this prior swing high. But for a fresh break beyond those levels, we will have to wait for further confirmation. Rather than that, maybe buy on dip strategy can be applied. So in yesterday's session, I had talked about this possibility of equities mostly trading in the range, and here we saw this reversal happening after the Dow got closer to these prior swing lows, and now the same story is unfolding on the higher side. But as of now, I can't say same story because here we will have to allow at least couple of hours for it to consolidate. We can't really go short at the moment, and also if you want to initiate the long trade, that also increases the risk considerably as it has climbed quite significantly from these low levels which were closer to the support. So that is one thing to be kept in mind. And also we have to then look at the relative strength and the weaknesses of these major US equity indices, so that as and when we have to take the trade, whether we want to go long or go short, we have the relative strength and the weaknesses of these three equity indices in mind. So for S&P 500, the gains were little over 1 percentage point. If we look at it, just little less than 1.5%. And for the Dow, the gains are almost similar in terms of the magnitude. Timeline of the rise is also similar, so there is not much of a difference. Let's look at the Nasdaq. For Nasdaq, the gains are more than 2 percentage points from the low to the high. So Nasdaq is apparently the most volatile of these three equity indices, and volatility means higher probability of getting the long moves. And if you want to trade, I personally prefer to trade with more volatile instruments. So for that reason, the preference can be given to the Nasdaq if you want to trade with these three equity indices. But in terms of the rise, the trajectory is almost similar. So there is not much of a difference in the timeline of these rise, and that is simply because we have the event driving this force, driving this move on the higher side. But if we look at the larger time frame, for Nasdaq, there is, I think, room to run on the higher side, at least towards these immediate swing highs. So we can target the levels of around 11,000 on the higher side. So here we can still go with the flow and keep looking for the opportunities to go long. So buy on dip strategy can be applied if in coming hours, if we see the Nasdaq stabilizing, maybe after a couple of hours, the initiation of the new trade can also be considered, with the possibility of Nasdaq climbing toward these immediate swing highs. So even on base count, we have the higher room for the Nasdaq to rise again from the current levels. If we look at the S&P 500, it has also gotten closer to these immediate swing highs, but still there is some room to run on the higher side. So this risk will have to be kept in mind that on the higher side, we don't really have too much of an space. We do have these resistance levels coming into play, and that is to be kept in mind, and your trades should be optimized accordingly to make sure that these key levels are there to help you maximize the profit and avoid the chances of getting the trade wrong. So that's the story for US equities. Let's take a look on the developments in European equity space as well. For DAX, the gains are not that substantial. Actually, it has given up some of those earlier gains. So the rise was almost around 1 percentage point, little less than 1 percentage point. So the gains were less than what we saw for the US equities. Now let's see its chart on the larger time frame, and it seems to be trading within this range with its support around 14,400. From those levels it has reversed, but on the higher side it is not really far off from the immediate swing high. So it is better to avoid any kind of trade in DAX. Even if you want to go for the long trade, we do have better momentum in US equities, so that is also one thing to avoid the DAX, and rather than DAX, maybe focus on the Nasdaq, or even the Dow Jones can be considered. For short selling trades, the DX can be considered. It is trading with not much strength. So as and when you feel like that moves are enough and not further gains are likely, in that scenario, you can keep an eye on the price moves of the DX, and then as and when things look good enough to go short, that trade can also be taken. So that's my take looking at the current price trajectories of various forex currencies as well as the equity indices, particularly for the US, and also we saw this Germany's DAX equity index. So thank you all for joining in. I will be back tomorrow with a fresh assessment of the relative strength and weakness. Not tomorrow, apparently. Tomorrow is Saturday, so we will be seeing each other on Monday only after the gap of weekend. So thank you all for joining in. Have a fabulous day, a profitable day, and weekend ahead. See you on Monday. Goodbye.